Hello everyone, very good evening. So welcome to another session of cost accounting revision. I know there was a small gap in between, but okay, we are resuming now with our revision series. So the chapter that we'll be doing is joint and byproduct costing, right? Another important chapter from the examination point of view. Please join in live. All those who are joining in live, please let me know. Okay, I'll update in the WhatsApp group also that we are now live. Yes. Okay, we'll wait for 2-3 minutes so that the students can join. Then we will start with the discussion of joint and byproduct. So I'll try to cover all the concepts on this joint and byproduct costing. Yes, good evening Vedant. Please confirm once if audio video is clear. Yes, welcome back. Welcome back to you people also. All clear. Okay, fine. So hello, Galaxy of Knowledge by KP. Good evening. So today we'll be taking up this chapter of joint and byproduct. So first we'll try to understand what we are trying to study in this chapter, right? What is the purpose of this chapter? We'll quickly do. Then we have a certain methods that we have to discuss, right? Sorry Vedanta, I totally forgot. Yeah, tomorrow for sure I'll send. Tomorrow for sure I will send that, right? I'll share that tomorrow for sure. I totally forgot about that. Tomorrow I'll send. Right? Okay, so let's first try to find out, let's try to understand what is a joint product, what is a byproduct, right? What is the meaning and what we are trying to do in this chapter. That's what we are going to do. We will study. Right, so what we are trying to find out is what is a joint and byproduct. Okay, so I'll take just one example, a very simple example. Let's say you are a CA student, right? You are a CA student. Now, as a CA student, you visit a coaching center. You visit a coaching center and you want to take classes for group 2. You want to take classes for CA Inter group 2. Right? Now what happen is in this CA Inter group 2 classes you pay a fee, right? What is the fee? You are saying that I want to enroll for the complete group. For the complete group you are paying a fee of, let's say, 30,000 rupees. For all the 3 subjects, costing, audit and FMSM, you are paying a fee of 30,000 rupees, right? So this is, in this, there are 3 subjects. What that coaching center is covering, I'll tell you that. The coaching center says, okay, if you pay this 30,000, we'll give you 4 things. We will give you 4 things, right? That is the first subject, paper number 4, costing class will be there. Then paper number 5, audit class will be there. Then paper number 6, FMSM class will be there. And along with that, the test series is also included. right? Test series is also included. Clear? Now here we need to find out what is a joint product and what is a byproduct, right? These main products, the products which are having almost equal value and equal importance, these are called as joint products, right? And if there is any product which is manufactured along with the main product which is of a lesser value than the main product, what I'm saying is which is of a lesser value than the main product, then it is called a byproduct. Now test series is what? Test series is my byproduct, right? Test series is called as a byproduct. Clear? What is a joint product and what is a byproduct? So that is what we have seen. If the products are of equal importance, equal value, those are known as joint product. And if there is a product which is manufactured along with the main product which has a very less value as compared to the main product, right? For example, if you are manufacturing a t-shirt, if there is some cloth left and you make a handkerchief out of it, right? So that handkerchief will be selling for just 100 rupees or 50 rupees, whereas that t-shirt or the shirt will be selling for 2000, 1500, 2000 rupees. So that handkerchief is a byproduct, right? Now, what is the problem here? The problem here is this 30,000 is what we call it as, this is called as a joint cost. This is called as a joint cost. Now the problem is, tomorrow if your friend comes to this coaching center and your friend says, sir, I don't need the coaching for all the classes. What I need is, I need only test series, or I need only one subject out of the 3 subjects. Now for the coaching center, what they should know, for the coaching center, they should know that out of this 30,000, what is the cost of costing class, what is the cost of audit class, what is the cost of FMSM class, what is the cost of test series, so that if they have to sell any of the individual subjects or individual test series, if they do not know the cost, how can they sell it? They will not be able to specify the selling price for that, right? So basically in this chapter, what we have to do is, whatever is the joint cost incurred, whatever is the joint cost incurred, we have to distribute that joint cost among the joint product and the byproduct, so that if we have to sell that joint product or a byproduct individually, we are able to sell that particular product. That's the whole purpose, right? And this point where you have incurred a cost, for example, okay, I'll take another example. For example, you have input, right? You have input a raw material. From that input, you have done some processing. There is cost also that is incurred. Let's say a joint cost that includes raw material cost, labor cost, overheads. So there is a joint cost incurred of 2 lakh rupees. And out of this, there are 3 products which are manufactured, right? There are 3 products which are manufactured. That is main product, joint product 2. Right, now the thing is, if you have to sell this joint product to separately, you should know that out of this 2 lakh, what is the cost that belongs to this joint product 2. That is the simple purpose of studying this chapter. So this point is what we call it as split off point. This is called as split off point, right? From where the 3 products are being split. Then let's say you have identified the cost of J2. You have identified that out of this, the cost on J2 is 30,000 rupees. Now you go to the market and try to sell J2, but the market says that, sir, this J2 product, it cannot be sold like this, right? This product as such will not have any market. So they say, do one thing, do some further processing on this, right? So on this, you have to incur a certain extra cost, let's say 10,000 rupees. This 10,000 rupees, that is the extra cost that you have to incur beyond the joint cost, is what we call it as further. We call it as further processing cost, right? We call it as further processing cost, right? We call it as FPC, further processing cost. So now your total cost will be 40,000. So you might be selling at 40,000, or you might be selling at 45,000 or 50,000 then. Right, so there will be a concept coming, that is further processing cost, that is to make the product marketable. We might have to incur a certain extra cost beyond this joint cost. Beyond this joint cost, we might have to incur certain extra cost, which we call it as a further processing cost. Right, so is this part clear? Is the fundamental clear, that what is the purpose of studying this joint and byproduct? I just want to know this much first. If the fundamental is clear to you, that why we are studying this particular chapter, then we will move to the notes part, that what is the treatment for the byproduct. There are various methods now which tell us how to distribute the byproducts, or distribute the joint cost between the byproducts and the joint products. First, you should tell me that whether this much part is clear, that what is a joint product, what is a byproduct, and what is the purpose of studying this chapter. Yes. So this much part is clear, right? Okay, fine. So now coming to a byproduct. Now what is a byproduct? We have done, right? So byproduct is what? The byproduct is any ancillary product produced in addition to the main product, comparatively of a lesser value as compared to the main product. So this is what treatment of byproduct in the process account. Now the first is the units of byproduct credited to the process account, and value will be the net realizable value. What is a net realizable value now? Net realizable value means NRV. It is the estimated final sales value. Final sales value means here you have incurred 30,000 of cost, right? 10,000 of FPC. This is your share in the joint cost. Then you have FPC, 30,000 of cost, 10,000 of FPC. Then further you might have to incur some selling and distribution cost of let's say 8,000 rupees, right? So what is the total cost now that you have incurred? That is 30 plus 10, 48,000, and you might be selling it for sales might be 60,000. Clear? Now this sales is what we call it as final sales value. This is what we call it as final sales value, right? That is the sales after incurring all the cost, including the further processing cost, and if there is any selling and distribution cost. So from this final sales value, if I reduce my FPC, if I reduce my selling and distribution expenses, that will give you the net realizable value, that this sale price is what? This sale price you have generated because you have incurred a certain further processing cost and a selling and distribution cost, right? So what is the net amount that you are realizing? So 60,000 minus 10,000 minus 8,000, that will give you NRV, realizable value, right? So this is one way, that if you are preparing the process account here you will write byproduct, right? Here you will write units, and you will write amount as NRV. So this is how you can show it in the process account. Although in the byproduct and joint product, they are normally not asking about the process account. Second way is the units of the byproduct credited to the process account and value credited to costing P&L account. Units you take it in the process account, the value, whatever is the value of that byproduct, you take it to the costing profit and loss account. That is another way of doing it. Third is the units of the byproduct credited to process account and value is equal to share in the joint cost by reverse cost method. So this reverse cost method, I'll discuss it in the end, right? Because this reverse cost method is applicable to joint product as well as it is applicable to the byproduct. So when I will cover it with the joint product, there itself I will cover it with the I'll cover it for byproduct also, right? So this is all about the byproducts. Now the major part of this chapter is related to the joint product, where we have the different methods of distribution of joint cost to the joint products, right? What are those methods? First, what is a joint product produced from the same process? Both the products are of the substantial or equal value. Then split, what is a split off point? I have told you that split off point is the point up to which the costs are incurred jointly, and after this point separate costs are incurred on the respective products, and this separate cost is what we call it as FPC, or the further processing cost. This is what we call it as further processing cost. Clear? This is what we call it as further processing cost. Now let's see what are the different methods of apportionment of joint cost. What are the different methods which are given to us, that how we can distribute the joint cost, sir? Okay, now what are the different methods? The first method is physical units method. Right? So first method that we have is physical units method. Physical unit method says that apportionment of joint cost in the proportion of number of units manufactured of each joint product, right? That in which ratio you will distribute your joint cost. For example, if you have incurred, let's say, a joint cost of 30,000, let's say 30,000 you have incurred as a joint cost. By incurring this joint cost, you have manufactured two products, that is J1 and J2, right? And what is the number of units manufactured? Let's say the number of units manufactured are 2000. So how to distribute this 30,000 now? How to distribute this 30,000? That is in the ratio of the number of units manufactured. So it will be in the ratio of 1:1. Right? So number of units manufactured. Now in this case, in the case of number of units being manufactured, in case there is a normal loss also. In case there is a normal loss also. In case of this, if there is a normal loss, then what to do? In case there is a normal loss, first distribute a normal loss. First distribute normal loss. In which ratio? Normal loss in the ratio of good units. Right? First distribute what is the total number of units of normal loss in the ratio of good units. Right? Then the total units that you get, that is good units plus normal loss, that will make the ratio for the distribution of joint cost. Right? So this is one important point in this, that you need to be careful that if there is a normal loss, I think there is in the illustration number 1, it is there, that coal tar question is there, where you have a normal loss. So first distribute the normal loss in the ratio of good units. Then what you will get is, for every product there will be a good unit, there will be a normal loss share in that. So good units plus normal loss will give you total units. In those total units ratio you will distribute your joint cost. Right? In the ratio of total units you will distribute your joint cost. Is this clear? The first method is clear? Yes. Please let me know if the physical unit method is clear. So I've tried covering a small point here regarding the normal loss. Is it clear, everyone? Yes, is the first method clear, guys? Then we will move to the second method. Now the second method that we have is sales value or the market value of output. Now which sales value? This method is also called at sales value at split off point. This is also called as sales value at split off point. right? Also called as sales value at split off point. That is, now here we have got the number of units. Okay, I'll write again. Let's say you have incurred a joint cost of 30,000 rupees. By incurring that joint cost, what you are getting is, you are getting two products, J1 and J2, right? And the number of units being sold, number of units is 2000 and 2000. Then you are given the selling price. Then you are given what? You are given the selling price per unit, right? Let's say it is 2 rupees and it is 3 rupees. Now, whether the joint cost is to be distributed in this selling price? No, sir. What does the method says? The method says it has to be in the ratio of the sales value, right? So at split off point, this is that split off point, that if you sell the product at split off point itself, if you sell the product at split off point itself, then what is the value that you will get? That is what we want to know. So here you will get what? Here you will get your sales value at split off point, 4,000 and 6,000. So this will be the ratio now for the distribution of joint cost, right? So this will be the ratio for distribution of joint cost, right? So this is your second method, that is the sales value at split off point. That if you are not doing any further processing, if you are selling the product at the split off point itself, then what is the value that you will get? Clear with this? Okay. So I'll try to cover all the minute details which can be there in the question also, right? I'll try to cover all the things in the concept itself, so that when you are solving the question, you feel confident. That's what the motive here is. Okay. Now coming to the next method, if you have any doubt, please let me know, right? You can just drop it in the chat if you have any doubt. The third is the final sales value of the output. What is your final sales value? Your final sales value is apportionment of joint cost in the proportion of final sales value. That is the sales value after further processing cost of each joint product, right? So what will be your final sales value? It will be joint cost plus further processing cost plus profit is equal to sales value, right? So this is what we call it as the final sales value, that if there is any further processing to be done. Sir, in case on a particular product, if there is no further processing to be done, then whatever is the value at split off point, that will be the final sales value. If there is a further processing to be done, then whatever is the sales value after doing further processing, that will be the final sales value, right? So this you have to be clear. If a joint product is not to be further processed, then sales value at split off point will be the final sales value, right? Then this will be the final sales value. So whatever is the final sales value that you will get, that will give you that will be the ratio for the distribution. That will be the ratio for distribution. Like in this case itself, if this is the sales value like you are getting, this is at split off point. Let's say after this you have to incur a certain FPC on this product 2000, and on this product you are incurring a FPC of 1000, right? So what will be your final sales value now? If there is profit also, we'll add profit. If there is any selling and distribution extra cost incurred, then we will add that also. So now this will be the final sales value now. So this will become the ratio, final sales value. Again, it has to be the value. It is not the selling price per unit. It has to be the sales value that matters. Clear with this? So 3 methods we are done with. Fourth method that we are having is net realizable value. Now what is a net realizable value? That the joint cost is to be apportioned in the proportion of NRV. What is NRV? I told you NRV is estimated final sales value. This one, final sales value, right? This final sales value minus this FPC. that will give you the proportion, in which the apportionment of the joint cost is to be done. The final sales value minus FPC, that will be your NRV. This is what we call it as net realizable value. Sir, in case, listen to it very carefully, in case there is no FPC, then what will be the net realizable value? If there is no FPC, then whatever is the sales value at split off point, that will be your NRV. What I am saying is, if there is no FPC, then sales value at split off point, will be your NRV, that is net realizable value, right? Then it will be your NRV. Is this clear? If there is no FPC, in case there is FPC, then it has to be the final sales value minus FPC, minus if you have incurred any selling and distribution expenses, that also you have to subtract, right? So this is the net realizable value method. Then fifth one is contribution margin method. Now, what is that contribution margin method? In the contribution margin method, they say that whatever is the total joint cost being incurred, that is to be divided into two parts, right? Contribution margin says what? That whatever is the joint cost that you are incurring, that joint cost, you have to divide it into two parts, that some part of that cost will be variable, right? And some part of that will be a fixed cost. Now, if logically, if we think, variable cost is what? The variable cost is the cost which is totally dependent upon the number of units being manufactured, right? So they say this cost, this variable cost, it should be distributed in the ratio of number of units. It should be distributed in the ratio of output, that is the number of units being manufactured. Sir, what about the fixed cost then? What is the fixed cost? It is to be distributed. It is to be distributed in the ratio of contribution of each product. In the ratio of contribution of each product. Right now, Sirji, what is contribution? This contribution is what? Contribution is your sales minus variable cost. This is your contribution. So you will calculate the contribution of each product, then in that ratio we will distribute it. That will be given. In this case, that will be given, that how much is variable and how much is fixed. Right? In this particular case, it will be given that what is your variable cost, or it can write it as marginal cost. Right? Marginal cost is nothing but your variable cost only. In the illustration, if you see, they have used the word marginal. Right? Marginal cost is nothing but your variable cost only. So variable cost is to be distributed in the ratio of output, and the fixed cost is to be distributed in the ratio of contribution. Right? So in this case, what you have to do is, you have to first distribute the variable cost, then you can distribute fixed cost, because if you do not distribute variable cost, you cannot calculate the contribution of each product. Right? So first, always you have to distribute the variable cost. Clear? After that, you can distribute the fixed cost in the ratio of contribution. Contribution is what? Sales minus variable cost. Is this method clear? This is called as contribution. Now, why the fixed cost is being distributed in the ratio of contribution? We'll do it in the marginal costing also. That what is a contribution? Contribution is that profit that tells us that after recovering the variable cost, the cost which is dependent upon the number of units, the cost which is directly related to the units, after recovering that cost, do we have something left to pay to recover our fixed cost or not? Right? Clear with this, everyone? Correct? Okay. Now, next we have is, after this contribution margin method, we have average unit cost method. Average unit cost method says what? The average unit cost method says you have two things. One is your joint cost. The second thing is what is the number of units manufactured for each of the product, right? You divide these two, you get on an average what is the cost incurred. So calculate the average unit cost. Unit cost means for every 1 unit what is the average cost. That is the joint cost divided by total number of units produced, right? Whatever is the average unit cost that you get, multiply it with the number of units of each product. Multiply with number of units of each product, right? What you will get is your distribution of joint cost. Let's take an example also for this. Let's take a quick example for this. Let's say the joint cost incurred is 60,000. Joint cost incurred is 60,000, right? Out of this, the 3 products are manufactured, that is J1, J2 and J3. What is the output that is there for J1, J2? 2000 units for this, 2000 units for this and 2000 units for this. So total, how many units you are manufacturing? 6000 units. So they say calculate the average unit cost. Calculate average unit cost. Average unit cost means total 60,000 is the cost incurred and how many units are manufactured in that? That is 6000 units. So that means on an average 10 rupees per unit. Right, this is what you are getting. So for J1, what will be the cost? Multiplied by 10, that is 20,000. For J2, what will be the cost? Multiplied by 10, that is 20,000. And for this also multiplied by 10, that is 20,000. So 60,000 distributed like this on the basis of average unit cost. Right, so this is another method. Clear with this, everyone? So any of these methods, sir, is there any specific important method in this? I would say any of the method can be asked. Any of the method they can ask you in the exam. And in the MCQ, joint and byproducts can come. High chances of the joint and byproduct part to be asked in the MCQs. Very high chances. Right? So after this, we are left with just the last method, that is the reverse cost method. First, please tell me if this much part is clear to you people. Yes. First tell me if this much part is clear to you. Please let me know if this much part is clear. Then I'll move to the reverse cost method. Now this reverse cost method is applicable to both joint product and byproduct. For the joint product, I have already given the statement here. I'll tell you for the byproduct also, then how to use it for the byproduct. Then I will tell you the variety of the questions that can come in the joint and byproduct and where you have to be slightly careful in the joint and byproduct. We'll take a one important question out of this that they have already asked and also they can again ask that question, right? Just let me know if this much part is clear, guys. So in this summary book, I have tried to cover the major part, the small points also I have tried to cover. So that's why I told you that this summary book is going to be really helpful. Just one day before the exam also, if you want to read and revise everything, just this 60-70 pages will give you the proper revision. Will cover all the important points that are required to be kept in mind for the examination purpose. So that's how I've prepared this summary book, keeping in mind that only I've prepared this. Okay, now coming to the reverse cost method. The reverse cost method says, first let's talk about the joint product, right? This I have done it in case of a joint product. So this is for a joint product that we are taking. Then I will explain you for the byproduct also, right? This is for a joint product. Now the reverse cost method, as the name suggests, that you have to go it in the reverse direction. In this case, what will be given to you? You will be given the selling price of the product, sales of the product you will be given. You will be given what is the profit percentage on that, right? Now, that is what will be given. Sales value of the output is given to you. Profit, it will be given. The profit percentage will be given to you. So sales minus net profit will give you what? The cost of sales, or we can call it as total cost. It will give you what? It will give you total cost incurred, isn't it? Sales minus profit is what? Sales minus profit is your total cost. Out of the total cost, if you subtract your selling and distribution overheads, what you get? Estimated cost of production. If you subtract your office and administration overheads, what do you get? Estimated works cost. If you subtract the further processing cost, what you get is share in the joint cost. Basically, what we are doing is, now listen to it very carefully. What we are doing here is, I am saying if there are three products, right? J1, J2 and J3. The sales value is given to you. Let's say the sales value is given as 25,000 each. 25,000 each. This is the sales value that is given to you. Okay, sir. Then the profit will be given to you. So minus profit. Let's say 2,000 is the profit which is given to you. 2,000 profit, 2,000 profit. Right? So what we are getting here is 23,000, 23,000 and 23,000. This will be given to you. So this will give you what? Total cost. Total cost incurred. Total cost means the share in the joint cost. Total cost will have what? If you talk about this total cost means the share in the joint cost. Share in joint cost plus FPC plus selling and distribution overheads. All these three things are included in the total cost, isn't it? Yes, sir. All these three things are included in the total cost. Right? This part, I'll write it here. Is it clear? So out of this total cost now, if I subtract from here my selling and distribution overheads, let's say 2,000 is the selling and distribution overheads, and if I subtract FPC, let's say 1,000 is FPC, 1,000, 1,000 and 1,000. So what will be left? Out of total cost, you have subtracted FPC, you have subtracted selling and distribution. What is left? Share in the joint cost. So this 20,000, 20,000 and 20,000. So total 60,000 joint cost is distributed like this. Share in the joint cost. So if you go by the reverse cost method, it will automatically get distributed between the three products. Right? Now you will say that, sir, reverse cost method is not directly given in the module. Yes, it is not directly given in the module, but yes, these kind of questions are there. Right? So they have not specifically mentioned it as a separate method, but this exactly is the method that they follow in the questions. So this method is called as reverse cost method. Please let me know if this reverse cost method is clear in case of joint product. We are yet to do it for the byproduct, right? After this, we'll do it reverse cost method for the byproducts. Yes, please let me know if you people are clear with this thing. Yes guys, please reply if you people are clear with the joint product part. of reverse cost method, then I will move to the byproduct part. That along with the main product, if there are byproducts. Okay, clear? Fine. Then we will see okay, so now we will see what done. Fine. Now we'll see the byproduct part of it. Right? How to apply the reverse cost method in the byproduct. Let's say there is a input. There is a input that is a joint cost being incurred, right? So you have a certain joint cost being incurred. So you have incurred a joint cost of, let's say, 60,000 rupees. By incurring this joint cost, what you are getting is, you are getting three different products. Right? What are the three different products that you are getting? You are getting a product M1. This is your main product. You are getting a byproduct B1. You are getting a byproduct B2. Right? So this is what you are getting. Now in this case, what should be done? In this case, how to distribute this joint cost of 60,000 between all the three products? First, what is the first step that you will do? The first step is, you will apply the reverse cost method. This part. You will apply the reverse cost method amongst the byproducts. Right? So you will apply reverse cost method here. You will apply reverse cost method in byproducts only. In byproducts. How? Let's say the sales are given to you. For both the byproduct, the sales are given 50,000 and 50,000. Right? Sales will be given to you. In the question only, they will be specifying that what is the sales which are there. Sales minus the profit is given to you. Right? Let's say the profit is given as 10,000 and 10,000. This will give you what? This will give you total cost. Total cost of 40,000 and 40,000. Now, if you want to find out that out of this total cost, what is the share in the joint cost? You will subtract what? FPC. Now, let's see the FPC is given to you minus further processing cost. FPC is given as 25,000 and 30,000. Right? So what you will get is share in. What you will get is share in joint cost. That comes to 15,000 and 10,000. Right? This is what you will get. Share in the joint cost, that is 15,000 and 10,000. Now what this share in the joint cost to reflect that, sir, in this 60,000 of joint cost, what is the share of the product B1? It is 15,000. What is the share of the product B2? It is 10,000. So out of this 60,000, 25,000 is done, sir. So what is left is 35,000. So that means that 35,000 is what? That 35,000 is the share in the joint cost of the main product. So how will you calculate the share of M1? So for this M1, what we will say that what is the total joint cost? Total joint cost is 60,000. Out of that, share of B1 is 15,000. Share of B2 is 10,000. Right? So the remaining 35,000 is what? Share of M1 in joint cost. Now if you want to find out the selling price of this, so what you can do? Add FPC. What you will get? You will get total cost. Add FPC. You will get total cost. Add profit. You will get what? Sales. You will get what? Sales. This is your reverse cost method in case of byproduct. Yes, is this clear? The reverse cost method in case of the byproduct now. So for joint product, it is straight away. For byproduct, what we have to do is first apply the reverse cost method in the byproduct. You get share in the joint cost of the byproduct. The remaining share will go to the main product. Yes, any doubts in this part? Any doubts in joint and byproduct part? So with this, the concept part is done. For joint and byproduct, the concept part is done, sir. If you have any doubts in the concept part, just go through the concept, take 2 minutes, revise the whole concept, then let me know if you have any doubts in the conceptual part of this joint and byproduct. Then I will do one question with you, which is a very important question. Then I will tell you the variety of questions that they can ask in the joint and byproduct. First, go through the concept once. And please let me know if you have any doubts in any of the concept. Because see, the conceptual clarity is going to play a very important role in your attempt. If you are conceptually strong, then definitely you can tackle a difficult question also. A twisted question also you can handle because you know the concept clearly. So that's why I'm focusing more on the conceptual part. That okay, yes, the concepts should be clear. That is very, very important. Yes guys, please let me know if you have any doubts or we can proceed. If you are not having any doubts, then we'll proceed. Clear? Everything is clear? Okay, good enough. If everything is clear, that's good enough. Okay. So now let's take up. Now in this joint and byproduct, one thing is MCQs can be there, definitely. Important chapter for MCQs, right? This I will definitely say that this is an important chapter for MCQs, right? And they have been asking the MCQs from this. In terms of what? In terms of what they can ask MCQ on any method of distribution. On any method of distribution. Right, so you should know all the methods of distribution. On any method they can ask you an MCQ. So this is definitely an important chapter for that purpose. If we talk about questions, this illustration number 4 is important. If you talk about this, then illustration number 4 is important. So we'll take up this illustration number 4. First 3 illustrations are very, very simple, very, very straight away. So we'll take up this illustration number 4. Right, this is important. Already asked in the exam, right? Can they repeat it? Yes, for sure they can repeat this illustration. For sure, with the different, just they will change the values, they will change the figures, and they will ask you the same question. 101% they can ask you again. Right, so it's not like that they have already asked a question, they cannot ask it again. They can ask it again. They have already asked in the past, so they can definitely ask it again, right? So let's read this question now. Inorganic chemical purchases salt and processes it into more refined products such as caustic soda, chlorine, and PVC. In the month of July, inorganic chemicals purchased salt for rupees 40,000. Okay. The conversion cost of 60,000 were incurred up to the split off point at which the two saleable products were produced. Chlorine can be further processed into PVC. Right, now what is the joint cost incurred here? 40,000 is your material cost, 60,000 is your conversion cost. Conversion cost means the labor and overheads, the cost which is incurred for converting the raw material into finished goods. So what is your joint cost that is incurred? Joint cost incurred is 40,000 of material cost plus 60,000 of conversion cost. So total joint cost incurred is 1 lakh. Right. Now, by incurring this, what you are getting, sir? By incurring this 1 lakh, you are getting two products. One is caustic soda, right? And another product that you are getting is chlorine, not PVC, right? At the split off point, you are getting two products. One is your caustic soda, another one is your chlorine. This chlorine can be further processed into PVC, right? This chlorine can be further processed into PVC. Now, what is the information given? That caustic soda production is 1200 units, sale is 1200 units, selling price per ton is 50. That is caustic soda you are selling as such, right? Whatever the quantity you are getting at split off point, the whole of that quantity you are selling at 50 rupees per ton. Chlorine 800 production, but there is no sales. Why there is no sales? Because that means the whole of this chlorine is being converted into PVC. Because what is the PVC you are getting? 500 production, 500 sales at 200 rupees per ton. That means the whole of this chlorine is being converted into PVC. Let's read the line further. All 800 tons of chlorine were further processed at an incremental cost of rupees 20,000. So this 20,000 is what? This 20,000 is your further processing cost to yield 500 tons of PVC. There was no beginning or ending inventories of caustic soda, chlorine or PVC in July. Now there is an active market for chlorine. Inorganic chemicals could have sold all this July production of chlorine at rupees 75 per ton. Now they say the chlorine itself can be sold in the market. Right, if you want to sell chlorine as such in the market, it will fetch 75 rupees per ton. If you do not convert chlorine into PVC, you sell chlorine as such in the market, you can fetch 75 rupees per ton. Right, you can fetch 75 rupees per ton. Now show how the joint cost of 1 lakh rupees. So here the joint cost they have mentioned. Otherwise, we can calculate like this also: material cost plus the labor cost and conversion cost. Okay, show how the joint cost of rupees 1 lakh would be apportioned between caustic soda and chlorine under each of the following methods. Sales value at split off point. Now at split off point, what are the two things that you are getting? You are getting caustic soda and chlorine. At split off point, what is the values that you are getting? So the caustic soda that you are getting, what is the sales value? Sales value will be 1200 multiplied by 50, that is 60,000. At split off point, the another product that you are getting is chlorine, not PVC. You are getting what? Chlorine. Chlorine how much? 800 units you are getting. And if you go to the market to sell the chlorine itself at the split off point, what is the value? What is the price per unit that you would have fetched? The price per unit that you would have fetched is 75 rupees. So 800 into 75. So what you are getting is 60,000. So in this ratio, now you will distribute your cost, right? The joint cost of 1 lakh will be distributed in the ratio of sales value at split off point. That is in the ratio of 1:1. So the joint cost will be 50,000 for caustic soda and 50,000 for chlorine. Is this clear? Right, so this is sales value at split off point. Next they are asking for is the physical units method. Right, between caustic soda and chlorine, how will you distribute in the ratio of physical units? Very simple, sir. Physical units of caustic soda and chlorine. So it will be in the ratio of 1200 is to 800. Right, so this, when you are talking about physical unit method, the ratio will be 1200 is to 800. 1200, 12:8. Right, 3:2. That is the ratio in which you will distribute the joint cost of 1 lakh rupees. Next, what is given is the estimated net realizable value. Now, what is the net realizable value here? Now you have to distribute between what? You have to distribute between caustic soda and chlorine. Let's see this. Let's see this. Okay, I'll just solve this much part. That the joint cost is to be distributed between caustic soda and chlorine. Right? In how will you distribute now? On the basis of NRV. For NRV, what is the thing that we take? Final sales value minus FPC. What is the final sales value? For caustic soda, what will be the final sales value? Can you tell me the final sales value for caustic soda? Is there any further processing being done on the caustic soda? No, sir. The caustic soda is being sold at the split off point. So in case there is no further processing, whatever is the split off point, that will be the final sales value. So for caustic soda, the final sales value will be 1200 multiplied by 50, that is 60,000. Now for chlorine, what will be the final sales value? As per the present method, what will be the final sales value for chlorine? Sir, at present, the chlorine is being further processed into PVC. Then it is being sold. So final sales value will be what? 500 into 200. Right? So the final sales value here will be 500 multiplied by 200. That is 1 lakh. Minus final sales value minus further processing cost. Is there any further processing cost on the caustic soda? No, sir. Is there any further processing cost on the chlorine? Yes, sir. That is this 20,000 rupees. So here we'll take minus 20,000. This will give you the NRV. That is 60,000 and 80,000. Right. So this will become the ratio for distribution of joint cost. In this ratio, you will distribute your joint cost. Right. So the joint cost of 1 lakh will be distributed in the ratio of 6:8. That is 3:4. In this ratio, you will distribute your joint cost. So that will come to 42,857 and remaining 57,143. In this particular ratio, you will distribute your joint cost of 1 lakh. Is this clear, everyone? Is the first part clear? NRV part is very, very important here. So just focus a bit more on the NRV part, because NRV part is the one they have been asking the most in the examination, right? So just be clear with the NRV part. Right, now let's see the second part of this question. What is the second part they are asking? The second part of this question says, Lifetime Swimming Pool Products offers to purchase 800 tons of chlorine in August at rupees 75 per ton. Now there is a company, Lifetime Swimming Pool. They come and ask this company, sir, do not process chlorine into PVC. Just sell the whole of chlorine to us. At what price? At 75 rupees per ton. Right, this sale of chlorine would mean that no PVC would be produced in August. That means if you are selling the chlorine, then obviously you cannot convert the chlorine into PVC. Explain how the acceptance of this offer for the month of August would affect the operating income. So there is, if you accept the offer, then what will be your income? And if you do not accept the offer, then what will be your income? Whether it will increase or whether it will decrease. Now you have two options. You have two options. One is accept offer. Right. Another one is what? Another one is do not accept offer. Right. Now, if you are accepting the offer, then what will happen? You will not convert it into PVC. You will sell 800 tons at the rate of 75 rupees, right? You will sell it for 60,000. So your income will be what? 60,000 rupees. Now, if you do not accept the offer, then what will happen? You will convert it into PVC. You will sell it as a PVC, that is 1 lakh. Is this your income? No, sir. For this conversion, you have to incur 20,000 of further processing costs. So your income will be 80,000. So what should be done? Here, if you accept the offer, your income is 60,000. If you convert it into PVC and sell, your income is 80,000. So what should be done? Decline the offer. Decline the offer of lifetime swimming pool products. Right? Is this question clear? Any doubts in this? Now, this is a very, very, very important question from examination point of view. I'm saying again and again that this can be repeated. Yes, please let me know if this is clear to you people. Yes, guys, any doubts? So this question was important. Now I'll tell you one or two more important questions in this, that what are the types of questions that they can ask. I'll tell you just the type of questions, same kind of questions only, not nothing difficult can be there. Some little bit of a twist here and there, whatever they can do, that depends upon the institute. But the same question they have asked. The same question they have asked in the examination. So not little bit of a twist you can tackle if you are conceptually strong. Right? Not too much of twisting and turns. Okay, that won't be done by the institute, don't worry. Now, what are the different types of questions? Two more types I want to discuss. One of the things that they can do is, now listen to it very carefully. They say there is a joint cost. In a question, what will be there? In a question, you will be given the joint cost. Let's say the joint cost given is 50,000 rupees. Right? There is a joint cost given, that is 50,000 rupees. Now they say out of this joint product, there are 3 products being manufactured, right? There are 3 products being manufactured, M1, M2, right? And B1. 2 main products and a byproduct. Okay, sir. Then they say that what is to be done? They say first, out of this joint cost, reduce the value of the byproduct at NRV. So what you will do, in that case, first you will calculate the NRV of this product B1. You will subtract this NRV from the joint cost. Let's say it comes to 10,000. This NRV comes to, let's say, 10,000. So what you will do is this NRV you will subtract it from the joint cost. So minus 10,000. So what is left is 40,000. Now you will be given the information that this 40,000 now is to be distributed between M1 and M2. For that, any of the methods they can give. The physical output method they can give, contribution margin method they can give, sales value at split off point, sales value after further processing, any of the methods can be given, right? So the language, how the language they can use is, see the language here. I'll highlight the language. The net realizable value of the byproduct is used to reduce the joint production cost. Right? After that, what it is? Before the joint costs are allocated to the main products. Right? This is the kind of language that they can use. Right? This is another important thing that they are doing. That whatever is the joint cost, first they will specifically mention that from that joint cost, reduce the cost of the byproduct. For that, they have mentioned like NRV. Most of the cases they will mention NRV, that calculate the NRV of the byproduct, reduce it from the joint cost. The remaining joint cost is to be distributed among the other products. Clear? So this is one type that they can ask. Another type is they will give you the joint cost. They will give you what? They will give you the joint cost. Let's say the joint cost is rupees 10 lakh. Right? Now, by incurring this joint cost, you are getting what? You are getting 1, 2, 3, 4 products. Let's say by incurring this joint cost of 10 lakh, you are getting 4 products, right? Product A, product B, product C, product D. Now the question says, what is to be done? This joint cost is to be distributed on the basis of NRV. On the basis of NRV, you have to distribute this joint cost among the products A, B and C. So what is the first step that you will do? You will calculate NRV here. NRV will be what? NRV will be the final sales value. Final sales value of all the products minus FPC of the products, further processing cost of the products. Right, so that will give you the NRV. That will give you the NRV. So in this ratio now you will distribute your joint cost. Clear? In the ratio of NRV, you have to distribute your joint cost. So you will distribute, and first you will calculate the NRV, final sales value minus FPC. If there is no FPC, then whatever is the sales value at split off point, that will be your final sales value. That will be your ratio of NRV. In this ratio, you will distribute your joint cost. Then what they will ask in the question? They will ask you to calculate the profit. They will ask you to calculate the profit of the company if there is no further processing done. If there is no further processing done, right? So how will you calculate the profits of the company? How will you calculate the profits if no FPC, no further processing cost done? So there are 4 products A, B, C and D. Right? There are 4 products A, B, C and D. So what will you take? Sales will be given to you. Right? From the sales, what will you subtract? There is no FPC. What will you subtract? You will just subtract share in the joint cost. Sir, how the share will come? This on the basis of NRV. On the basis of NRV, whatever is the joint cost that you have calculated, you will take that share of joint cost. Right? Share in the joint cost. That will give you the profits of the company. That will give you the profits. Right? Now here, one doubt that normally comes is that, sir, if the profit is, you are required to calculate the profit if there is no FPC, then in this NRV, we are taking the FPC, sir. Then should we again calculate the joint cost? No. Right? These are 2 separate things. Joint cost is to be distributed on the basis of NRV. So there we'll take final sales value minus FPC. That is to be calculated on the basis of NRV only. Then whether you are further processing or not, doesn't matter. The only thing is, if they ask you to calculate if there is no FPC, so sales minus whatever is the share in the joint cost, you will prepare a working note here for this. This will be what? This will be your working note. Right? This will act as a working note. Clear? This will act as a working note. So you will subtract this. Now the second part of this question they might ask that, sir, what are the profits if FPC is incurred, if there is further processing being done? If FPC is incurred, then what will be the profits? Now it will not impact how you are distributing the joint cost, because it is clearly mentioned that joint cost is to be distributed on NRV, and NRV will always be final sales value minus FPC, right? So the profit calculation will not impact your joint cost distribution. Clear? That is one thing that you have to be careful. Now if FPC is done, then what will happen? A product, B product, C product and D product. You will take the sales here. You will take the sales here. minus, now for profits we need total cost. Now total cost here will have two elements. One, share in the joint cost. One is share in the joint cost. You will subtract, right? Share in the joint cost. ठीक है जी. Then after that minus FPC. Minus FPC. This will give you the profits. So the only difference will be, here will be, this will give you your profits. What is the cost you are subtracting here? Right? So whether the profits are to be calculated before further processing or it is to be calculated after further processing, it will not impact how the joint cost is being distributed, because for the joint cost it is clearly mentioned that it is to be distributed on the basis of NRV. Is this clear? The type of question, this type of question is also there here. I think the second part is there. Yes, the second question itself is there. Right? Sun Moon Limited produces, selling price at split off point is given, selling price after further processing is given, that is the final sales. Raw material cost this and other manufacturing cost this, which are to be absorbed on the basis of their NRV. So joint cost will be what? 35,90,000 plus 5,47,000. This will be your joint cost, right? $41,37,000. Now this 41,30,000 is to be distributed amongst A, B, C, D and E on the basis of what? On the basis of NRV. For NRV, what you will do? For NRV, you will take first the final sales value, that is this units into selling price after further processing, minus you will do further processing. You will get NRV. In the ratio of that NRV, you will distribute everything. You will distribute your joint cost. Right? Further processing cost is given to you. Prepare the following in respect statement showing the income forecast of the company, assuming that none of its products are to be further processed. Right? So joint cost distribution will be on NRV only. This is the only difference. Sales, here you will do sales minus share in the joint cost. That's it. If further processed, then sales minus share in joint cost minus FPC. That will give you the profits. Right? So this is another important question. This is the type of questions that they are asking. 1 and 2. This question number 3, I want you people to practice. This is similar to your illustration number 4. The only thing is the conversion part here. The kiloliters to liters, liters, ml to liters, that conversion part you have to do it carefully. That conversion will more or less be given in the exam only. So nothing as such to worry about the things. Right? And the case scenario for this is also very, very important, right? I must say that you should be doing this case scenario. Very important for case scenario. I've already uploaded all the case scenarios on YouTube, right? You will find all the case scenarios on the YouTube. Separate series, case scenario, costing, FM, all the case scenarios I've already uploaded, right? So please do this case scenario of joint and byproduct. So with this, we are done with the joint and byproducts. Is this clear, guys? Joint and byproducts is clear? Yes, any doubts in joint and byproducts? Yes, everyone clear with this joint and byproducts part? Please let me know once. So today we'll be doing this much only, joint and byproducts. Tomorrow we'll be doing standard costing, which is one of the most, the fearful chapters. Standard costing we'll do. We'll do all the concepts of standard costing. Right? We will do all the concepts of standard costing. All the tables and everything we'll do. And for the module questions, if you want, I'll upload all the module questions from my ICI module series. I'll upload as a separate video for standard costing. Concepts we'll be covering tomorrow. For all the concepts of standard costing, I'll take small examples to make you understand the concept. right? Yes, everyone, please let me know if it is clear, guys. So today's session will stop here. Joint and byproducts done. I want you people to practice joint and byproducts. Tomorrow we'll be doing standard costing, which is a very important and standard costing is one topic that most of the students have seen. They are really fearful about standard costing. So we'll try and make it easy. Right. So I will assess if the session is to be started at 6:30. I'll start at 6:30, or else 7 to 9 we can do. Right, most likely 7 o'clock only will do. 7 to 9, 2 hours enough for standard costing, all the concepts revision, that is enough, right? NRV is calculated. NRV, that is what I was saying. NRV is to be calculated as this final sales value. In this question, if you say, in this question only, if you want to see how the NRV is being calculated, NRV means this final sales value, 2 lakh into 25, right? 30,000 into 17, 25,000 into 12, 20,000 into 0, that will be 20,000 into 10 now. If there is no selling price after further processing, so in this case, what will take 20,000 into 10, 75,000 into 14, into 20, not 14, 75,000 into 20, that will give you what? That will give you final sales value. That will give you what here? That will give you final sales value. Final sales value, right? Okay, I'll write here. What is the final sales value? 2 lakh into 2 lakh multiplied by 25. That will come to 50 lakhs. Beru, how are you? How's your preparation going on? Coimbatore branch, face to face. Late comer, all going good. 25,000 into 12, that comes to 3 lakh. How can I forget you guys? Evening batch, Coimbatore evening batch. How's our Punjab fan? So 20,000 into 10 will remain 2 lakh rupees as such, because there is no FPC, right? And here 75,000 multiplied by 20, that will be 50 lakhs, right? Now from this final sales value, if you subtract your FPC, FPC is given as what? For A it is 12,50,000, and here it is 1,50,000 for B. Then it is for C, it is it is only 50,000. For D it is nothing. Then it is 1,50,000. Now final sales value minus FPC, you will get NRV. Got it? Venkat, he came one day to the live lecture also. I remember one day he come. All the best, Beru. Keep preparing well. Attempt well. Asker is in touch with me. Glad you people are staying in touch. That's the good feeling. That's the good part. I'll meet you guys in December. December I'll be coming to Coimbatore again. That time we'll meet the evening batch. Thank you. Okay, Vedant done. Okay, any other doubts, guys, in joint and byproducts? Any other doubts? Bye, Beru. Clear, everyone, with the joint and byproducts? Any other doubts? If you have, please let me know. Otherwise, we'll close the session. We'll close today's session. Then we will tomorrow we'll directly jump to standard costing. Now that is very, very important. Please share it with your friends also. Anyone who feels that standard costing is difficult, we will try and make it easy. Right? Standard costing is actually not difficult. The only thing is some people feel that it is difficult, because if you are not conceptually strong, if you are not able to understand it conceptually, then it will definitely feel like being difficult, but it is actually not difficult. It's a very interesting chapter. So we'll try and make it easy. So please do share it with your friends. Anyone who wants to do standard costing, who feels that standard costing is difficult, join in live. I'll make it easy for sure. Right? Okay, no doubts. Yes, everyone who is live, any doubts? I'll wait for another 1 minute, then I'll close the session. If you people are not having any doubts. Yes, Vedant, all clear with this part. So please practice the questions of joint and byproduct. Then I'll take move to standard costing. Standard, marginal, budgetary and service. 4 chapters left, 4 days, done with this. Right? Marginal is easy. Budgetary is nothing new in that. Service is the small things that I have to explain in the question, especially that equivalent part that I have to explain. Right? Service costing also otherwise is the very easy. Sure, Vedant, by tomorrow I'll definitely send you that. Right? I have your mail, so I'll definitely send you by that tomorrow. Okay? For sure. Tomorrow I'll definitely do it, Sunday. So tomorrow evening we will be having a class. Is it okay? Sunday? Fine now. Sunday evening. I hope you people are not having any other plans. So we'll have the class. Okay? Done? Fine. So we are done for today. So see you guys tomorrow with a very, very, very important topic, that is standard costing. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.